In recent months, Nigerians have faced severe economic hardships. Long lines at ATM and queues at banks have become a daily ordeal as people withdraw just enough to get through the day. Public unrest has escalated with violent clashes and property damages becoming more common. This turmoil began in May 2023 when the current president, Bola Ahmed Tinubu, made a sweeping economic change, cutting fuel subsidy and abandoning the Naira's currency peg. These moves led to a drastic devaluation of the Naira, pushing inflation above 35%. The impact has been devastating. Many workers have stopped showing up to work because their salaries no longer cover basic expenses like transportation and commuting. Companies are responding by downsizing their products to match consumer reduced purchasing power. Over 75% of Nigerian households now live on $3 to $5 per day. It's a stark reality that underscores the depth of the crisis. Now, the discovery of oil in the 1950s transformed the nation from an agricultural exporter into an oil-dependent economy. In 1970s, oil boom led to a period of rapid growth, but the Nigeria's over-reliance on oil also made it vulnerable to global market fluctuations. The decline in oil prices from over $100 per barrel in 2014 to less than half of that in the recent years have worsened the economic situation. While it has been a pressing issue in Nigeria faced with fuel subsidy, completely removing it without a clear goal in mind may itself be worse off. Nigeria's oil wealth, instead of being a blessing, has gone around to become a curse. The immense revenue have fueled corruption and mismanagement of funds. The oil sector, controlled by a few elite figures in Nigeria, has also turned out to become a breeding ground for corruption. Institutions meant to manage money and oil wealth have become undermined, heading to inefficiency and public disenfranchisement. According to the Corruption Perception Index, Nigeria ranks near the bottom globally in terms of corruption, which hampers economic progress and undermines foreign investment. While some countries manage their resources very well, Nigeria's weak governance and corruption have exacerbated its struggles. Now, this mismanagement of oil revenue has led to poor infrastructure, inadequate public service, and rising poverty levels all across the country. Now, let's talk about the inflation dilemma. Inflation is essentially the increase in the prices of goods and the fall in purchasing value of money. In Nigeria, a kilogram of rice that cost around 500 naira as at 2023 now costs approximately 1,600 naira. Beans, on the other hand, has seen a 29% spike in price increase over the same period of time. Now, the inflationary pressure is caused by several factors. While a little inflation over time is a good thing, but too much inflation like what Nigeria is currently experiencing is a severe economic issue. Now, here are some of the reasons behind Nigeria's current inflation mayhem. Number one, insecurity. Insecurity is a major driver of food inflation. Attacks on farms and extortion of farmers have led to a decreased agricultural output. With less food being produced and transported, prices have surged unimaginably. The combination of diminished supply and high demand has also made essential items unaffordable for many Nigerians. Secondly, infrastructural challenges. Deteriorating infrastructure further compounds the problem. Poor transportation network means that food items suffer from delays, spoilage, and increased costs as they are moved from farms to the markets. The inefficiency adds to overall price hike. Thirdly, exchange rate issues. The exchange rate is another critical factor that has influenced the increase in the price of goods and commodities. The Naira's value has plummeted from being around 530 naira to $1 at the black market price to hitting over 600 naira to a dollar as at 2023. Now in 2024, the dollar rate is at a staggering high of 1,600 naira to a dollar at the time of filming this. This devaluation makes imported goods, including agricultural equipment and raw materials, very expensive, which in turn raises the cost of locally produced goods. We move over to government spending. Now, government spending is the bull in the horn. Government spending and borrowing has gradually turned into a big dog in the last year in Nigeria's economic issues. Government spending and borrowing has gradually turned into a big dog in the list of Nigeria's economic issues. Excessive borrowing, especially and particularly from the Central Bank of Nigeria, has increased the money supply without a corresponding rise in goods and services. Now, this imbalance has further devalued the naira and fueled devaluation. From unnecessary purchases to lavish spendings without adequate measures to curtail, the impact has led to Nigeria's debt index hitting an all-time high. Now, global economic conditions, including lingering effects of the pandemic, geopolitical tensions, and other disruptions, have also contributed to Nigeria's inflation problem. Nigeria's inflation crisis is a very complex issue with deep historical, economic, and political roots. While high inflation presents significant challenges, it is also important to recognize the underlying factors contributing to this situation. Now, addressing these problems will require comprehensive and coordinated effort from every sector of society. Despite the economic difficulties, Nigeria's tech ecosystem is booming, offering a glimmer of hope. Innovation in fintech and other tech fields continue to attract investors and investment to drive growth in the country. Companies like Paystack are leading the way by streamlining businesses and operations and providing crucial financial services to support growth and development. Now, if you found this video insightful, please do not forget to like, share, and subscribe for more content like this. And thanks for watching. I'll see you next time.